So we're learning that thinly traded, highly shorted stocks can have an outsized effect on the overall market as well.
Well, sure. I mean, particularly in the moves last week, Brian, we saw it selling in individual stocks across every sector, which suggested that it was the hedge funds forced to sell in order to make up for what they had to pay to cover their shorts. And you could see it because it wasn't just a whole sector. It was individual stocks that are very popular. They sit in hedge funds, but they lost last week as the retail pack just came in and took over. Yeah.
Yeah, I mean, it's also the market structure issue, something that we've talked about a lot for the last year and a half before all this happened, which is ETFs, whatever you think of them, they have a huge role in the market. And the point we're trying to make about GameStop, and we're not picking on the XRT or picking on GameStop, is that when you have these kinds of shifts and a widely owned, supposedly sort of basket of stocks that are, you know, sized up based on their size, that when things move, it's like pushing a super tanker around.
Brian, it's absolutely true. You know, we had an inkling of this many years ago. It was a summer when Janet Yellen wanted to raise rates. I remember it as if it were yesterday because it showed us what could happen in the ETF markets. Suddenly, you know, she had to stop. There was a movement of I think it was China's currency. But the point is the ETF sold off everything. And folks were left like, hey, what happened to my ETF? I had very good companies in there. And yet everything was thrown out. And that's one thing that investors, I think, in the ETFs don't realize. When everything is going up, it's great. But even a very thinly traded stock, as you said, less than 2% at the start of the year, suddenly moves up to 19%. And when that share price starts coming down, as the puts imply, all of a sudden you're seeing major outflows. That's the good and the bad of being in these products.
Yeah, and there's good and bad to investing. 200 years of investing, no matter what it might be in, tells us that. It could be stocks, it could be tulips, whatever it is. Quincy Crosby,
silver.
We appreciate your views. Thank you very Or silver today, the Burl Ives trade. Thank you very much.
Shepard Smith here. Thanks for watching CNBC on YouTube.